But again, for right now, markets continuing to slide as we do see right now investors seeking some stability after a 2-day rout for stocks. It's been 3 essentially now. Now, the question naturally, has that taken steam out of the exchange-traded funds that had a hot 2021? Let's welcome BNY Mellon Asset Servicing Global Head of ETFs, Ben Slavin, on the show. Ben, how do inflows look through what's been a very volatile 2022 so far?
They look impressive. We've seen $350 billion into ETFs, and in these markets, that's no small feat. But also interesting, we're seeing a product development market in the ETF space continue to run hot, with over 260 ETFs launched to date. And I expect that number to continue to climb. We might not see that record that we did last year, but it's certainly going to give it a run for its money.
We can get into those new products in a bit, but when you talk about those inflows that you're seeing, what does that tell you about how investors are approaching this market right now? I mean, we've been talking so much about the Fed. Obviously, the big concern overhang has been inflation, and yet you are seeing inflows into ETFs. What's your read on it?
Yeah, I think from, the flows we see, it's really a lack of consensus. I mean, certainly in the last couple of days, post Jackson Hole and the hawkish comments or the hawkish outlook from the Fed, we've seen a rotation out of high yield into treasuries in the short end of the curve. But if you back out, over the last few months and really year to date, we've seen investors look to try to replace some of the income in their portfolios as they've been rotating out of the bond market with pressure on rates. So products that offer some alternative source of income, specifically dividends, and products that have some kind of alternative income like a QYLD that offers a covered call strategy that provides some lever of income from options are becoming very popular with investors in this market.
Now, Ben, when it comes to the story so far for 2022, your notes say that innovation hasn't stopped, and we've seen a lot of popularity among single stock ETFs. Explain to us exactly what single stock ETFs are and what the popularity has been of those products in 2022.
Yeah, here we go. We're going to see really a kind of a wave of these new products. We've seen about 20 leverage and short single stock ETFs come to market to date. And we have over 75 filings with the SEC pending right now. And I expect that number to grow. We just saw filings for, stocks like GME and AMC, some of the meme stocks. But also we're seeing some additional innovation. So it's not just leverage and short single stocks. It's actually leverage and short products that are tied to ETFs. Also products, single stock ETFs, are products that do not have depository receipts like Saudi Aramco, and also covered call single stock ETFs. So this has really opened up a large new category for issuers to try to tap into. And again, I expect this category to grow, but there are some really important things for investors to note and do their homework as these products continue to come to market.
Yeah, what are some of those things? I mean, there's certainly risks involved here. What should investors be considering before they put their money there?
Well, look, there's a variety of uses for these products. Everything from hedging risk to tax loss harvesting to being able to short in areas where investors can't, like an IRA, and a wide variety of different trading strategies can be used. But these are trading tools. And again, it's important for investors to do their homework and really understand that these are daily reset products. So it's important to understand what your leverage factor is. Expenses are important, especially if you have, multiple day holding periods. And generally, just trying to keep up with the tickers. As I anticipate a wave of these products, just keeping up with the tickers where there'll be different variants of stocks like Tesla to make sure that you are actually buying the right product with the right leverage factor that you're looking for, I think will, again, has the potential to create some confusion. So again, important to do your homework and really know what you're owning.
You know, a lot of people look to the ETF space as kind of a signal of how high the demand is for retail investors. What do you see in terms of that story? Because it seemed like a lot of the meme frenzy that we had seen in 2021 cast a light on how prevalent the retail investor is in today's market. Still the same story?
Well, we're seeing interest in ETFs really across the board. Retail investors, sure, but institutional investors are increasingly using ETFs as part of their own portfolio. So that 350 billion in this year is not just retail investors. That's really across the board in terms of the different types of investors. But you can look to the data in some of the thematic ETFs that have been launched in the last couple of years that have been incredibly popular with investors that continue to attract flows. And those products, have a larger percentage of retail investors typically. And also on the leverage and short ETFs, many of which have been out there for years, also have grown quite a bit in the last year or two and continue to attract interest from retail investors for sure. So I think very healthy market, and I think we're going to see some more innovation there and more interest from retail investors.
BNY Mellon Asset Servicing Global Head of ETFs, Ben Slavin, good to have you on today. Appreciate the time.